Hi friends, my name is Chetan Potdar and today I'm going to be talking to you about an indicator which is called as Relative Strength Index or RSI. RSI is one of the most popular indicators to be used around the world by people who want to trade into the stock markets or currencies or commodities. I will give you a quick tutorial about how RSI works and how you might be able to trade it. I am a professional trader and I am also a teacher of investments, trading and of how to make money in the stock market. I run a couple of pages on the internet. Do check them out. I have a page on Facebook called as Investments, that is INVEST-MINTS. I also have another 3 blogs. One of them is called as investments.blogspot.in, funnyfishmarket.wordpress.com and funnyfishmarket.blogspot.in. So see if you need to be on those pages, right? So let's move forward. So RSI was an indicator which was developed by a person called J. Wallace Wilder and it was published in 1978. It has become one of the most popular oscillator indicators. It is represented by a line which oscillates between 0 to 100. Now the reason it is called as an oscillator indicator because there are two different types of indicators. Like for example, if this are candlesticks, yeah, and you could plot an indicator on the price chart. So this could be a moving average, or you could actually have an indicator which is running below the price chart, and these are called as oscillators. The reason why they are called as oscillator is because these indicators oscillate between the upper and the lower band. Yeah, this band is always 100, this band is always 0, and these indicators keep on moving between 0 to 100, and hence it is called as an oscillator indicator. So as I was showing, it is represented by a line which oscillates between 0 to 100. Yeah, it is a momentum indicator that measures the speed and the change of price moments. Now you have to remember this. It is a momentum indicator, which basically means that it gives you what is the speed and rate of change of price in the charts, and this is how we have to trade it. Let's have a look at this chart. These are the candlesticks. This is the price which is represented by candlesticks. Yeah, I have plotted RSI below the candlesticks or the price chart. This is level 100, this is level 0, and then there are two bands. This one is 30 and this band is 70. So which essentially means that as I plot this indicator keeps on moving between 70 and 30. Now 70 is called as overbought and 30 is called as oversold. Yeah, this is how the indicator works. Now let's look at how this indicator does magic. Let me tell you, it is one of my most favorite indicators. It is an indicator which can make a lot of money to you, but you have to remember, indicator or a group of indicators will never make money for you. You have to form a system and a process behind an indicator, and only a system and a process will make money for you. A lot of times I've seen students who come down and tell me that, sir, I use 5 indicators. 5 indicators, 10 indicators, 300 indicators are not going to help for you unless and until you build a system and a process and you have a discipline of trading them. So please remember that. So RSI. So let's look at how the RSI is built. A technical momentum indicator that compares the magnitude of recent gains to the recent losses in an attempt to determine overbought and oversold condition. Now, what we are basically trying to do is we are trying to find out what is the magnitude of recent gains to the recent losses, which basically means that we are looking at determining what is the momentum in the price of the stock. Yeah, we are looking at overbought and oversold situations, and hence this indicator is also called as OBOS. OBOS stands for overbought oversold indicator. Yeah, what is the formula of RSI? RSI is very simple. It's RSI is equal to 100 minus 100 divided by 1 plus RS. RS which is equal to average gains divided by average losses. Okay, this is just for your information. You don't really need it. What more is important is that how do you use this indicator. To simplify the calculation explanation, RSI has been broken down into basic components. The first is RS, second is the average gains, and there is average loss. The RSI calculation is based on 14 periods. Now this is the most important. As Weller came up with this indicator, he was always using 14 periods, which means this 14 periods could be 14 candles. The 14 candles could be of 1 minute, or it could be about 30 minutes, or you could also use a daily candle, which means you can build the RSI system on 14 days period, which is the default suggested by Wilder. Yeah, losses are expressed as a positive value and not as a negative value. So let's look at the very first calculation. The very first calculation for the average gains and average loss are simple 14 period averages. Yeah, the first average gain is equal to sum of gains over past 14 periods divided by 14. First average loss is equal to sum of losses over past 14 periods divided by 14. That's how simple it is. The second and subsequent calculations are based on prior averages and current gain losses. So average gain is equal to previous average gain multiplied by 13 plus current gain divided by 14. Average loss is equal to previous average gain multiplied by 13 plus current losses divided by 14. Again, if the calculation is kind of getting to you, don't worry about it. What more is important is to know how to trade RSI. The RSI is most typically used on 14-day time frame, measured on scale from 0 to 100 with high and low levels marked at 30 and 70, which basically means that I told you RSI is a oscillator indicator. Yeah, it has to move between the values of 100 and 0, but the sensitivity to this indicator is always marked at 70 and 30. So it moves like this. If it is going below 30, it is called as OS or oversold, and if it is above 70, it is called as overbought. So this is how the oscillator keeps on moving between the values of 0 and 100. The readings above 70 indicate overbought, like I told you, and below 30 indicates oversold situations. The tops and bottoms are indicated when RSI goes above 70 or drops below 30. The more extreme high and low values 80 and 10 or 90 on 10 occur less frequently but indicate stronger momentum. It's very rare for you to look at the values of RSI at 90 or 10, but it does happen. Also at 80 and 20, but it does happen. But if you are looking at the values of 80 and 20, which means there is a very strong momentum into the stock. When price moves up very rapidly, at some point it is considered to be overbought. Likewise, when price falls very rapidly, at some point it is considered to be oversold. In either case, Wilder deemed a reaction or a reversal being imminent. In between 70 and 30, level is considered neutral, with the 50 level a sign of no trend, which means we are going to be focusing on only three values: 30, 70 and 50. 50 is considered to be a no trend value. 30 and 70 is basically giving you a certain trend. There is another way of trading RSI, which is divergence. Diversion between RSI and price is a very strong indication that market turning point is imminent. In fact, I know a lot of professional traders who only trade divergences, which basically means that if the price is going up and the RSI is going down, there is a divergence which is RSI is going down, there is a divergence which is created, and this basically goes to say that the momentum in the stock of the stock going up is losing its value and it is going to turn, and hence it is said that the market turning point is imminent. Bearish diversion occurs when the price makes a new high but the RSI makes a lower high, thus failing to confirm, which basically means that if price is going up and RSI is moving down, then this is called as a bearish divergence. Bullish divergence occurs when the price is making a new low but RSI is making a new high, which means the price would be moving down like this, but RSI would be moving up, which basically means that the momentum of the stock going down is actually weakening. And since it is weakening, sorry for my handwriting, but since it is weakening, it is going to move up. So hence the turn of prices is imminent. Now let's look at how do we trade RSI, overbought, oversold. As the reading of the RSI is above 70, it is said to be an overbought condition. Reversal is considered imminent, and the security can be sold. If the RSI is below 30, it is said to be oversold and the price can be expected to reverse and turn up, so it can be overbought. Which means here is a situation where it is overbought. Here is a situation where it is overbought. And if you look at it in a corresponding manner, this was an overbought situation. This was an overbought situation. And when we go towards this is called as oversold. And subsequently this is an oversold situation. So the idea is very simple. The idea is that you sell out when you are hitting the overbought region, and you actually buy into the security when you are hitting the oversold situation. So this is where you buy. So this is 70. This part is 30. Trading RSI by divergence. RSI can be traded by establishing divergence between the price and the indicator. As and when the divergence is noticed, the ongoing trend is said to be weakening, and hence a reversal is imminent. You may unwind. So let's look at the chart and let's look at the divergence. Now this is the price which is going up, and while this price is going up, here again you can look at a mild price moving up. But while the price is moving up in a milder manner, RSI is actually making a lower low. So the price is going higher, but RSI is actually moving down. This is considered to be a divergence. And once the diversion happens, it is expected that the price is going to start turning around, and this is exactly what happens. The price starts moving around. So this is how we trade RSI by divergence. So thank you guys for listening. Thank you for your time. If you have any questions or queries or comments, do put it up on either on YouTube, or do put it up on my blog, or do put it up on my Facebook page, and I will be glad to help you out if you need to learn anything from me. Thanks and bye.